With me on the line now is Capital Network's mining analyst, Sam Catalano. Sam, afternoon to you.
Good afternoon.
We're talking Rambler Metals and Mining. Sam, introduce them to us first off. What's their focus? What are their assets?
Sure. So Rambler, its key assets is a copper mine located in Newfoundland and Labrador in Canada. The key thing that I think investors should be aware of here is that at this end of the market, it's very difficult to find higher quality, lower risk exposure to the copper market. And Rambler, through the Ming mine in a low risk jurisdiction like Canada, they're well established for its mining industry. So you've got workforce, infrastructure, all those sorts of things. An asset that's already operating. It's an exposure for investors that can give you that leverage to the copper market, which has a relatively strong outlook in a relatively low-risk jurisdiction. So certainly one for investors to look at.
In terms of the outlook for Rambler themselves, what scope is there for potential expansion?
Yeah, so that's, I think, the key thing that we'd like to focus on, and something that we've been doing a bit of work on, is the fact that this particular mine, Rambler, are currently delivering an expansion at the moment, which should be complete by the middle of this year. So that's moving the operation to about 7.2 thousand tonnes of copper per year for a 20-year mine life. So a relatively healthy mine life. That's a very important focus for investors, with a cash cost of around $1.70 a pound compared to the current copper price, which is around $2.50 a pound, so a reasonably good margin there. But the real key focus, and where I think investors could get excited, is the potential phase 3 expansion, which hasn't been sanctioned by the board yet. The company are currently undergoing studies into that, but something that we have looked at a little bit. And this phase 3 expansion could take production from the 7.2 that I mentioned up to about 11,000 tonnes of copper per annum. What that would also do, so increasing the scale of the operation, it would also reduce the cash costs down to around $1.50 to $1.60 per pound, which would really give the asset resilience against the vagaries of the copper market on a longer term basis. So ensure that it would be profitable through the highs and lows of cyclical commodity markets. And what we found is that even looking at a range of different copper price outcomes, is that with that expansion paid for and developed, we'd be looking at free cash flow yields of sort of between 15 and 35% per annum for this company, as I say, on a range of reasonable copper price outcomes. So, that's a nice little kicker of cash flow back to the company and potentially to shareholders as we move forward for this company. And that's really the sort of valuation focus and upside that we'd like to leave investors with.
I've spoken a few times here in the studio to Norman Williams. He's certainly excited about its potential. Tell me a bit more, Sam, about the company's management and ownership structure.
Sure, absolutely. Well, yes, Norman Williams, the CEO, he's been around the company for quite some time. Was previously the CFO, so knows the business extremely well. I've been very impressed with his sort of knowledge of the asset base when we've met, and certainly I'd want to leave investors with that impression. But secondly, I think to your point on ownership structure, the company is 72% owned by specialist natural resources private equity company Plinian Capital. It's through one of their funds, one of their mining funds, but nonetheless, a specific mining-focused company with a very strong board at that management of the private equity company with very strong mining experience. They saw the potential in the Ming mine and in Rambler a little while ago. Obviously, invested heavily in the company, and that's obviously been the catalyst for the company to invest in these expansions, and is now paying and will continue to pay, dividends, not in the literal sense maybe, but certainly in terms of the valuation upside for the company. So, I think, again, coming back to my original point, you've got an existing asset in a low-risk jurisdiction, relatively low cash costs, strong management team, a strong ownership structure, and the management incentivized to obviously get the most out of the asset. So, I think it's certainly one to look at for investors.
Thanks very much indeed, Sam. Appreciate your analysis.
No problem. Thank you.
Capital Network's mining analyst, Sam Catalano, there talking through Rambler Metals and Mining.